we have a panel discussion, something all of the InsurTechs here would be very keen to hear about. It's about the funding the future, funding vertical AI companies in insurance, AI models, AI service companies, AI first insurers and distributors. The InsurTech funding, after a slump in 2024, has been in a huge rise this year, and we expect it to cross $1 billion. To speak more about it, I invite our panelists, Mr. Shyy, Managing Director, Venture Eurazeo. Mr. Lars Gehrmann, Co-founder and Head, QIC Digital Venture Partners and Group Chief Digital Officer, Qatar Insurance Group. Mr. Adarsh Chokhani, CEO of Assurekit. Mr. Ashish Fafadia, Partner in Bloom. And our moderator today, Mr. Shwetank Verma, co-founder of India InsurTech Association and co-founder and managing partner of Leo Capital. Welcome.
Thank you, Prasad. Thank you, everyone. Before I get started, let me just ask the audience a few questions. How many InsurTech founders in the room today? Okay, a few. How many of you are using AI tools regularly? Slightly more, okay. How many of you want $5 million? People are not paying attention. That is scary. Some of you don't want $5 million? That's scary. All right, anyhow, let's kick off. Maybe I'll request everyone to start by giving a brief intro about what you do and what you're looking to get out of the event. So, Albert, do you want to kick us off?
Sure. Hi, hi everyone. Thanks a lot for having me here. My name is Albert Shyy. I'm a managing director with Eurazeo. We are a global investment company based in France, but investing in many parts of the world, including obviously in Asia and in India. We launched, InsurTech and FinTech has been one of the main verticals for us, and specifically we have a dedicated InsurTech fund which has been investing into growth stage InsurTech companies over the past few years, primarily in India and in Southeast Asia, but also with other parts of the world as well. And so I'm now very happy to be here and looking forward to the session.
Thank you. Lars?
Yeah, thank you very much for having me. Lars Gehrmann, I work for Qatar Insurance Company, a market-leading insurance company in the Middle East, market dominating Qatar, UAE, Oman, Kuwait, and in the future in Saudi. I'm Group Chief Digital Officer. I'm also the AI officer of the company, running the AI innovation team. I manage the InsurTech relationships and strategic partnerships, and as such we do invest in InsurTech as well. And I also built the MENA InsurTech Summit, proud partner of IIA altogether. We have something like 20, 30 InsurTechs out of Indian market joining us every year, so you're all invited to join us next year in May in Qatar, talking about the Middle East.
Thanks, Lars. Adarsh?
Hi, my name is Adarsh. I'm one of the co-founders at Assurekit. At Assurekit, we're building a full-stack platform to embed insurance-backed protection products in today's platform companies. We're a very thematic company. We effectively are working towards creating products for the MSME self-employed segment, the business that they do, which is commerce, and then the credit that they consume. We've been around for some time. I think for us, we've seen the journey from going from an API-led market to an AI-first market, and that's something that excites me a lot. So happy to be a part of this panel.
Thanks, Adarsh, for joining us, and it's always good to have a founder on the panel alongside all the investors. Ashish.
Hey, thank you. So Ashish Fafadia, one of the GPs and partners at Bloom Ventures. We are an early stage tech firm investing in India since 2011, and we have invested in few insurance tech startups as well through the journey. I specialize in fintech and growth companies in the firm. And thank you for having me over. Looking forward to a great session.
So thank you panelists for joining us. I'm Shwetank. I'm one of the co-founders of the India InsurTech Association, and I'm also the co-founder of Leo Capital. We are an early stage seed VC out of Singapore, investing globally with an interest in InsurTech. So maybe we kick off with the investors on the panel. To tell us a little bit about your InsurTech winners, and how has the AI wave affected them? Are you concerned about new age AI native companies disrupting them completely, destroying value, or have they been able to adapt to that value? So Ashish, do you want to kick us off?
Thanks, Shwetank. So I'll just give you a quick lowdown about a few of the companies that we have in the portfolio which have managed to break out and moved a little further. Outside of that, we still have a few. I'll just focus on the larger ones so that people can relate to it. We invested in this business called Turtlemint, which recently filed for a confidential route IPO. It is solving for the agents online and helping the agents sell. And back then when we invested, it was a bit of a contra thesis because everybody was trying to go for the B2C wave. And everybody almost in all aspects of the tech ecosystem were saying that we want to be more B2C. B2B2C was something which was niche. Another business which morphed into a similar space on the insurance side is a business called Zopper. Similar developments where things have one thing led to the other, and Servify is also in the gadget insurance and the gadget ownership management space. So when you look at some of these businesses, you realize the fact that insurance is something that some of them were organically solving for, or they ended up being on that side because there was a very high value. And back then, there was all of these companies in some form or the other were using tech as a horizontal platform in order to either build pipes from the underwriters to the corporates or to the agents or to the direct customers, or they were building deeper access. The key problem they were solving for is the markets were underserved, the markets lacked product penetration or product design, so you needed people who were going to evangelize or look at things grounds up. Cut 10 years, I don't think insurance penetration has changed 4x since it was 10 years ago. However, there have been a lot more enabling factors brought because of AI. So I would definitely go out there and say that AI is not disturbing these companies or kind of hurting them. These companies, credit to them, have been able to use the technology to their advantage and convenience and adapt to it. And that is something that one cannot take away, that a lot of these incumbents, it's very easy for us to say that, oh, a Turtlemint will come and disrupt a landmark. It's not easy. The incumbents have their own advantages, their distribution, the data. AI allows you to use that data smartly. And the direction that we see the whole financial services ecosystem moving is a high degree of personalization, which I'm happy to talk a little more. But you asked the question about, are companies facing the brunt of AI or not? My answer is, those who are developing, and most of these guys are using the frameworks to their advantage and only taking the story and the journey further up. So we are not seeing undercurrents, which are on the negative side. We are required to allocate capital from the balance sheet to be able to adopt for sure. So if you were thinking about trying to take a company profitable in X years, we definitely have to add a little more cushion to it, because you'll have to rethink the model, you'll have to rethink the tech. And it is not simply saying that, okay, 2 people in the team will start thinking about product in the founder's office, will be AI first, and then one find the whole company will become AI first. That ain't happening. Let's not hallucinate. You will have to do it at the corporate level. It has to be a horizontal function. But neither can you just simply become the other end that you want to be. So yeah, it's a careful journey, but I would say that for the ecosystem, it's adapting much better than what one would imagine.
Thanks, Ashish. Lots to pick on there, but before I do that, maybe Lars, would you like to comment on your portfolio and what are you seeing in the AI trends in insurance?
Yeah, look, I think we're different in Bloom here on your side. You're an insurance company. We have invested into InsurTechs that are not techs, but actually bringing new products or new distribution. And similar to the startups that Bloom has, all those startups have been using technology as an enabler. And they're using AI now to be even faster. So I think I don't see any threat on this. I think we see they're on a good path. They're growing. I think what's different for our engagement with InsurTechs that we are a leading company, so we have a lot of data. So I'm not looking out for AI use cases with startups. Why? Because I'm sitting on the wealth of data on my own. And to today's world, and we just had Google over here, I can use AI tools differently as a big organization and a couple of developers and can do a lot of things. So we really focus on, and will focus on new insurance products. And they need to be enabled by AI because the value chain requires this. We need to be faster. So I don't see a threat. I see it as a huge opportunity.
But do you want to pick up on that?
Yeah, sure. So, for us, when we launched our InsurTech fund more than 3 years ago, we really wanted to focus on distribution platforms for insurance, given, I think everyone knows about the low penetration rates for insurance, both in India as well as in Southeast Asia, which is our other key market. And so we've invested into platforms like Insurance Deco here in India, a couple in Southeast Asia called Koala and Igloo, all of which are some, you can call it maybe phygital type of models where you use agents, you use brokers, sometimes embedded insurance as well, to be able to, to bring more insurance products to more consumers. Oftentimes, first-time consumers of insurance products in markets like India, Indonesia, in the Philippines. And so, I think, similar to what Ashish was saying earlier, like these companies, they've been around since 2016, 17, 18. Obviously, pre the kind of the current AI, I guess, generation, and they're definitely incorporating AI into many of their business processes. I mean, we've seen some of these companies generate 20, 30+% productivity gains from incorporating AI into certain parts of their workflows, particularly in claims management or in kind of agentic AI kind of customer onboarding. We've seen claims turnaround times being reduced pretty significantly, maybe from 24 hours to less than 8 hours in some cases. And so I think as with probably every company in this room, right? I mean, I think everyone's trying to leverage and utilize AI tools in a way that really is able to drive and enhance the value proposition and and the cost benefits as well. So I think in the current state of the market in India, there's still so much more work to be done in terms of being able to drive increased adoption and to drive more distribution. And so actually, we'd really love to see more AI native coming out from that as well. But I think, for the time being, what we've seen is really companies, both our portfolio and otherwise, that are leveraging it in certain in specific use cases rather than to kind of have it as the kind of the fundamental part of the business model.
Makes a lot of sense. I think what we've been seeing mirrors everything that you've all said. Where there's a deep customer relationship, you've have the ability to actually adopt AI and make your product and your processes superior. I think where you were an automation startup or a more of a classical SaaS startup, you're starting to see churn there and a lot of pressure, especially from sort of large insurers. Maybe switching gears a little bit, Adarsh, do you want to talk a little bit about where have you implemented AI in, talking about implementation of AI as a startup, what have you seen on the ground up and where have you incorporated AI into your processes? And let's take it from there.
So at Assurekit, we look at AI very differently, right? We compartmentalize AI in two buckets. AI for Assurekit and AI that we effectively give downstream to our partners and consumers. So when I talk about AI for Assurekit, right, we have your common supply chain automation, so all the things that we do to optimize our processes, that's something which is now becoming more and more AI native. But the other part of being a full stack platform, what it helps us do is essentially we drive more than 3 million transactions a month, right? Which effectively means that ton of data is getting inflowed. What we are now trying more and more to sort of do is, apart from normal AI, which helps you figure out or basically take extended steps of what's going to happen, we are trying to do something which like the world calls as causal AI, right? Like essentially, why is it happening? What can I do to effectively drive a particular outcome? So to give you a small example, if I've given a customer a X risk rating on the platform, we are trying to also identify why that customer effectively is an X risk rating, right? So when that customer essentially comes and claims, each customer gets a different claims experience. So for great customers, we want to have to give them an expedited claims experience, right? But for customers that essentially are a little more fishy, where we don't know things about them, right? Then the journey becomes automatically longer. Now imagine, like if I were to take it 4 years back, right? Imagine a person sitting and doing it. So manual error effectively over there inhibits the way we could do it, but now with AI, things at Assurekit have become a lot more easier, right? And like when I said we're doing 3 million transactions, we're a 30-member team. So if you look at the number of people versus the quantum of business that we handle, that's effectively helping us build in the right manner. But when we talk and switch gears about AI for our platform companies, now what's essentially ended up happening is because we are co-creating a bunch of these products, right, and essentially a lot of these products are in white spaces. Let's take the MSMEs, for example, or fundamentally commerce, right, where essentially the traditional insurance has been transit marine insurance, but what we are doing is going a lot more beyond, which is managing return policies, managing dynamic fraud, managing marketplace fraud, and things like that. When we now deploy AI for our partners, that's essentially more to do with customer support. What can we do so that insurance, which has essentially been a negative CX business, can actually help them drive retention and engagement of their users? Because when you do that well and when you do that at scale, the value proposition is much stronger, right? They don't look at us as a platform that has come here to sell downstream products to their customers. Essentially, they switch gears into saying that, hey, this is our value proposition to our customer. And by the way, insurance is a very rock solid add-on to that value proposition, which is adding value. So for us, AI is divided into 2 buckets. AI for Assurekit that we consume, which is essentially either a cost center line item or a training data line item, is very separate from AI for customers, right, that we throw out. We don't sell AI, we consume AI. So essentially that's.
You wanted to add something, Ashish?
No, one thing that I just meant to put out as an overall comment is that when we look at 2005, 6, 7, when everybody was coming with a website online, the time that you had to adopt was much larger. It reduced when people were trying to do it through the app. With AI, that time is even shortened. But the ability to adapt is going to be higher. There are AI-centric startups now that can support you and they can manage a lot for you. So the value creation can happen both. So a lot of people do make this cliche comment now. Over the last few years, we've heard enough people say that it's not going to take away jobs. It's going to take away jobs from people who don't adopt. And that is a big opportunity here. So I would say that it's not about going to something to be scared of, but it's something to adapt faster than any other wave that has encountered business and financial services ever.
Maybe, can I add our
please.
perspective? Maybe as an insurance company, there's obviously big organizations need different kind of strategies. Working with AI, and yes, we have been a journey for a couple of years, and not only 2, so we have done a lot of things in the past. But for me, as the AI officer of the company, it's rather thinking about where could this lead to in 2 or 3 years, and it's not productivity. So don't get me wrong. Yes, AI and productivity is there. It's a must, table stakes. We have to work on it. We're working on it. There's still things to be done. But where will we be in 2 or 3 years is the question that we're still not able to answer, because insurance is data-driven business. You can build new business models, you can build new things of interacting with your customer. We see consumer behavior changing. They're not going anymore to our website. They're using the ChatGPTs of this world to interact with us and buy with us. So what does this mean for our product definition? What does it mean for maybe parametric insurance? I think those are the bigger questions that we have to answer as big organizations. As productivity is table stakes, we have to work on it, but the real question is this: how it will look like, how will insurance look like in 2 or 3 years?
That's a great segue to the next question then. So maybe maybe let me frame the question starting with Ashish. Insurance has got lots of sort of steps in the value chain, right? Underwriting, distribution, blah, blah. Where are you seeing most adoption of AI today? Where are you looking to make investments today in AI native startups?
This is an InsurTech event, not labor event. If I were in a labor event, I would say jobs are going. Here is an opportunity. So when you look at big areas, I think enabling support areas are important. So companies that are going and saying that I have a solutioning available for a business. So about 5 years ago, you had a lot of businesses or startups pitch which spoke about banking as a service model, where they were coming and saying, apart from ICICI, HDFC, SBI, and the top 5-7 players, not everybody could adopt and engage online, digitally, better UC, UX, etc. So the businesses were coming in and trying to create a layer and a bridge. You are today looking for these kind of businesses, but they will not come in the same banking as a service opportunity. That could be something what, there was a founder we have invested in called Bima Kavach. He's going and actually, I don't know whether he's in the room, they're going and supporting these companies and saying that we will enable you to create better products. The regulators have adopted technology very differently and are creating sandboxes. Then there are businesses which are going to take care of the entire customer-facing stack. However, here I would add, in as much as I'm very bullish about those areas, but if the founder doesn't have the vision to take care of financial services in general and focus on personalization layer, it's not fun. You're saying that I will handle your calls and automate those things. That's something that we saw the CPaaS story many years ago, and today it is a commodity. Companies like Exotel and all that are making good margins, and there is no entry for somebody else. It is an entry barrier. So if you're going to solve it with a high degree of personalization, a layer which will allow you to own the product stack and make margins commensurate to the growth of the business you're supporting, it's fun. If you're going to give a service and going to be capped out at a certain layer, which is what enterprises tend to do, then it's not fun. So when you talk to some of the largest of the insurance players and financial services players, they say, yeah, we will adopt with the help of startups. We will go and maybe do some 50, 60 strategic investments. We will get some boot camps done. We will get sandboxes. But out of the 60, we will not have more than 12 as long-term partners, long-term being defined as 2 years. That's what I said, the time to adapt is much lower. And out of those 12, somebody told me a very large enterprise which were having a CTO of wealth, CTO of insurance inside that group, and 3-4 of the VCs. They said out of those 12, we will have max 1 or 2 who will acquire and move on. So the scope for these young businesses gets limited. So it's not fun when you're going to be a mere service provider. It has to be a product-based offering. There has to be a personalization that you will have to own. It has to be hitting your system and layers. So that's the most interesting part of it. Claims is an interesting part. Frauds is an interesting part. That is where a lot of insurance companies will have to do a fair bit of catch-up themselves. So those are some of the areas.
Lars, what are you looking at?
Yeah, I was looking forward to if I can disagree with you. And maybe there's one point that I want to distinguish. I believe it depends, it's the consultant answer, but I believe the market is like this. It really depends on what kind of insurance company you're talking to and how mature they are in their involvement. Yeah? Because you just mentioned claims. Yes, we see a lot of InsurTechs out there that have amazing solutions. do we need those solutions? Not anymore. I can run many, many things cloud native in today's world. It's unbelievable what I can use in the hyperscaler technology to build on my own. And I'm sitting on my data. So actually, I don't need this. I know peers that don't have this flexibility nor the understanding. So yes, they need. So I think it depends on with whom you talk. We work on everything. So we work on claims, yeah, we work on fraud, we work on customer service center. I think those are what I said, table stakes. I'm not excited about it. What I'm excited about it is how can I replace myself as a manager? That's the next level, I believe. Yeah? How can I get part of my brain into an agent and he does part of my job? That really is something that is worthwhile fighting for, and this enables us new business models. Because if I have 5 agents from us and they're doing discussion, and in 10 minutes they come up with a solution, and I as a manager have to say, yes, this is the right solution, or give the right questions, those kind of business models I love. I love InsurTechs that have the capability to think through a new product category empowered by AI. That is something that is complicated for us to do because we're still bound in our own ways. But this is, I believe, where the future lays. We have opportunities here that we haven't seen since 10, 15 years. You mentioned internet, right? It's that big. Everything will change. So I think the ones that have, you talked about it, the vision, yeah? What I can change with the future, or what I can change in the future based on what we have today, I think are the ones that will win. And I think we see these kind of InsurTechs. I'm obviously not on the Indian market. But we have 2 companies out in the European market that I'm really close to that build a full-scale insurance company out of 10 people, making 100,000 of contracts with them. Full scale, selling, claims, everything distribution. So you can really run things differently if you do it right.
Yeah, so I think for me, I mean, I'd say first of all, just going back to the distribution theme that I talked about, like, you know, I think we still feel that there are so many white spaces within insurance in these markets. You know, especially in verticals like cyber, like, you know, like health, like climate, where, you know, to Lars's point, you know, new products, you know, AI powered, I think, you know, being able to bring different solutions to the market that, you know, can hopefully finally drive some increasing adoption because they're actually products that are going to be more needed by different, you know, maybe hyper segmentalized parts of the customer base. I think for me, that's one of the more exciting parts of the, you know, I guess of like the innovation that could be generated. And I think, you know, we'd love to see more vertical AI-powered distribution solutions within some of these specific cases, like even in health, right, where I think we've seen now an increasing number of companies that are targeting different parts of the value chain, from, you know, managed care to wellness to OPD. I think now there's a lot of solutions that can be built around, you know, some or all of these different parts, and I think with the power of AI, you can definitely verticalize that solution much more quickly than you could in the past. And so I think that's a really exciting part of the market for us. I think I don't know if Lars, it sounds like you wanted to say it. Go ahead.
No.
Yeah. The second part that no, I think we're interested in, but I'd say maybe a slightly more skeptical part is also like being able to drive a lot of productivity improvements, you know, in areas like claims, or in areas like underwriting, which I think also has a lot of potential, but is maybe tougher to, for us at least, to see a pathway to the billion-dollar outcome that you could achieve maybe a little bit easier if you can really get that product market fit correct in terms of the distribution side of the business.
Maybe, can we give the question back to you? It's not prepared, I know, but you see a lot of international startups. I see a couple of local, you see more Indian ones. But you see globally InsurTech, because your fund is really, I know where you're traveling to, so you see a lot. So can we hear your experience? Because we talked about productivity, and I believe on a VC perspective it's critical. New business model distribution, something else, but what's your experience?
Oh, I didn't expect to be put on the spot as a moderator on the panel, but look, I think, I mean, taking a step back, AI gives you a reframing opportunity completely. The way to think about it is, back in the day when factories were powered by horse cart, you know, everything was built around the horse cart. Then electricity came, and it took a while for people to realize you could plug this thing in here, you could plug this thing here, you could totally redo the way work is thought of and built. And we are similarly at the sort of early innings of AI adoption. So you can rethink everything. And at the moment, I think a lot of people are still applying AI to processes rather than rethinking what an AI native business will look like. So the most ambitious opportunities I've seen that founders are pursuing are really rewriting the rules with AI first. So buying an insurance company and saying we're going to AIfy it. A company like Corgi in the United States raised $70 million, has identified the large P&L spends which are human-led, and has said it's going to do an 80% reduction on that. Now, there is a whole host of regulatory questions, bias questions, all of those questions with the current AI models around that. But over time, I don't see how that will not play out. So I would say the most ambitious plays that I'm seeing are just take outcomes that are delivered by the insurance industry, like a TPA, like a full carrier, buy and completely AIfy everything from the ground up. Is that going to succeed all the time? Absolutely not. But you need just one or two people to succeed. That would be transformational.
And do you, I think, to the speaking part, just pounding on your question, do you see regional differences in the maturity of those startups doing these kind of business models? So if you compare US and you do a lot of in Europe, you do things here, things in Asia, do you see differences? Is all the same thinking on the leaders of the process?
I do see a difference. I think the difference is also driven a little bit by ease of regulations or difference in the way regulators approach some of these things. So, you know, United States is very much more state-wise regulated, and certain states allow much more flexibility than certain others. So for instance, I don't think you can buy a carrier here and try and redo everything from the ground up. It just wouldn't happen. And not really in India, but a bunch of, you know, Middle East, Southeast Asia. So there is a regional difference, but you know, the opportunity set is across. So it's a question of how do you navigate the challenges? Adarsh, you wanted to add something?
So essentially on the previous point, right, when we were effectively talking about insurers adopting AI or effectively letting partners go, right? So one thing that we've realized in our journey is, while yes, when we talk to VCs and they effectively do understand the space or they pick up value chain functions of the space like we are today, right? Distribution, claim support, servicing. In a bunch of spaces when we talk to our insurance partners, right? What essentially ends up happening is we need to understand that when we look at the BFSI spectrum, a lot of products in the banking space are all transactional in nature, right? But insurance is fairly more complex. Every product has to effectively consume and adopt AI differently, right? So when I look at high frequency products, they require on-spot decisioning, right? But when you look at property products, when you're gonna get one claim, let's say in 1 lakh policies, right? Like that requires a very different approach. So when we look at AI or AI native outcomes, the frame of reference, I think, in terms of what can be AI first from grounds up versus what requires a manual AI-led or AI-backed process, I think is very important, right? And just on the insurers bit, because I think Ashish, you mentioned, right? We do get, so Assurekit gets a lot of insurer support, right? So we work with Sompo, we work with the Royal Sundaram insurance company. We get support, right? So what essentially is required is for them to understand what we are doing. But in a lot of cases, because we run AI-led models, we quote unquote do have the delegated authority, right? Because the system makes the decision. So there is adoption per se, but AI success is, from my lens, our thesis essentially is if you don't have value chain ownership, AI adoption is extremely hard. There are too many people to effectively talk to for the system to work cohesively, right? So even in our VC conversations, whenever we do chat, whenever we do jam, it's very important to set the context in which we are building the business versus saying that, hey, this is what we're doing, right? Because product in insurance can be a tech product. Product in insurance, 9 out of 10 times for the industry is the actual insurance product, right? And that product is going to be looked upon in a very different manner. So just sort of closing thought, because the way we look at it is automation, support, effectively cost optimization. These are all functions in the value chain. But if you take the product out of the mix, like a motor will have a very different AI adoption curve from a property, from a health, from a life, right? So it's as complex as the banking industry is, with each product having its own set of complexities and baggage to sort of handle. So just that.
Fair points, fair points. Anyhow, but in the interest of time, I guess we're almost coming up. So wanted to share one last sort of quick fire question with the panel. So in 1903, whaling was the third largest employer globally. In 1905, it was nobody. It was gone. What happened? Whale oil stopped being useful because a chemical process came to replace it. So which job in insurance is going to be obsolete because of AI? Do you want to go first, Albert?
Sure. So I think in the short term, claims processing certainly is an area I think that is undergoing a lot of change right now. Maybe
any claims processes in the house? No.
Maybe
you're
slightly
safe.
more
You're
controversially,
safe.
I'd say in the longer term, underwriting is going to be something that I think is going to see a lot of change.
Wow, you put two massive bullseye targets, Lars.
Yeah, I don't think I'd agree. I think on claims, yes, I think we can automate a lot. If you're thinking parametric insurance, then there's no real claims experience there anymore. I believe that's a sector that we still need people, because you can learn a lot on the proposition out of claims. So that's why I don't believe it will go totally to zero in claims. For me, the job category that is the most impacted is customer service, and this is not necessarily insurance. This is somewhere where everyone is impacted. We see this already, so I think this is, for me, the one that potentially can go to zero.
Customer service, claims, underwriting.
So for me, I'll tell you what I want, right, rather. So instead of what will happen, I want there to be a world where essentially sales is obsolete, because I want the product to be so intuitive that users can come and buy it instead of a push-led model, be it B2B or B2C, right? Everything else in the insurance value chain, the way at least I look at it, a human element helps because it is at the end of the day a crisis management tool. So sales obsoleteness, I think, basically the push element of it, right? Making it a lot more intuitive for the user, B2B or B2C, something that we are betting on at our side of the structure.
Okay. Sales, got it. Ashish.
In the insurance business, you have customer facing at the front with sales, distribution, and at the rear end of the process with claims. To me, both those go. So anything which is customer facing is something that is going to require much lesser people for the same scale, or maybe this scale is good enough for maybe 20x the growth. That's good enough.
Well, there you have it. Everything's changing, so we're at the right time. AI is going to make the insurer of 2030 look very different from the insurer of 2025. And those of you who are building, this is a great time to be building. And those of you who are incumbents, Ashish said it, the adoption time is now. So if you are not adopting today, you're falling behind your incumbents like Lars who are adopting. And so the race is on. But it's an exciting, to quote Dickens, we live in exciting times. And
Insurers will need the AI insurance.
That's a whole different thing. But thank you so much for your time, everyone. Thank you.